Welcome to my series of video tutorials on how to prepare Form 990-EZ information return for small tax-exempt organizations. I'm David McCree. I'm a CPA, and you can find me on the web at myform990ez.com. Today we're going to talk about the revenue section of Form 990-EZ Part 1, Page 1. And in order to be able to fill out the form, you will have to have some sort of a report summarized of your accounting transactions. I'm assuming that you would have that either from Excel or Quicken or QuickBooks, something like that, which I'll talk about in a different video. But let's start with line 1, contributions, gifts, grants, and similar amounts received. Now, what makes a contribution or a grant is that it is a gift. You don't have to do anything to earn it. You don't have to provide a service. You don't have to give up any assets. It's just a freebie, a gift. So that goes on line 1. And so we're just going to put in some hypothetical numbers here and say that this organization had $50,400 in contributions. Line 2 is program service revenue, including government fees and contracts. So this would be a situation where you're providing a service in exchange for a fee. Perhaps it's healthcare services, perhaps it's educational services, and it could be that your state government is paying you on a fee-for-service basis to provide healthcare services to a homeless person or something like that. That would go in line 2, and we're just going to say this organization had $3,000 in program service revenue. Line 3, membership dues and assessments. Now, if you are a membership type organization, social welfare organization, social club, 501c7, chamber of commerce, or business league type of an organization, and people are members who are regularly associated with your organization and they receive benefits from you in exchange for their membership fees, then that would be membership dues and it would go on line 3. If you're an organization like a 501c3 that calls people members because they're valuable donors, like maybe if they donate $1,000, they're a bronze member. If they donate $5,000, they're a silver level member. If they donate $10,000, and so on. But they don't really receive anything in exchange for it. It's just a way of recognizing their level of giving. That type of membership would not go on line 3. Okay, that would be a contribution and it would go up on line 1. So you can differentiate between those. Line 4, investment income. Of course, most small organizations filing a Form 990-EZ don't have a lot of investment income, but it would be dividends or interest that you earn on some money or stocks that you own. Line 5A, gross amount from the sale of assets other than inventory. So this would be like a capital asset or something. Perhaps the organization had some furniture that it used in its operations or a vehicle and they sold that. You would include the sales price and the basis here to determine your gain or loss. Securities, sale of securities. Perhaps somebody donated. Let's say somebody donated $40,000 worth of stock to your organization last year. You held on to it for a year and then you decided to sell it. Okay, and it was appreciated stock and it kept going up. So when you received it last year, you recorded $40,000 in revenue. Okay, because that was a gift. So that then would become your basis. And let's say you sold it for $41,000, right? So you had a gain of $1,000, and that would shake out here on line 5C. Now there are special rules to securities, so I'm just giving you one scenario, one example. Okay, and just to clarify here, the reason we have a $40,000 basis here is that that was the value of the stock on the date we received it last year. Okay, and so that becomes our basis because we've already included that in revenue on last year's return. Okay, so all we want to do is we want to capture that gain between the 40,000 and the 1,000. So we make sure we include the gain on this year's return. So line 6 is gaming and fundraising event revenue. And gaming revenue would go on line 6A. Of course, if it's more than 15,000, you have to attach Schedule G, which is beyond the scope of this video. But gaming would be like if you held a raffle or bingo or something like that. So we'll say they had a raffle and they got $200. Okay. Now, fundraising events. A fundraising event is an event which is held specifically to raise funds. And it's not something that you do regularly necessarily, maybe a couple of times a year, maybe once a year. And it usually generates contribution revenue and gross receipts. Okay, so we're going to look at examples so that you can understand this. We're going to say that you're going to have a pie sale, an apple pie sale, okay, to raise revenue. So the idea, of course, is to sell it for more than you paid for it. So you went into your local supermarket, you checked out their pies, you found some nice apple pies for $6 a piece. You went to the store manager, he agreed to sell them to you for $3 a piece. Okay, so you bought 100. Okay, so that means you bought 100 times $3, so that was $300 in pies. That becomes your direct expense. Okay, and then you sold the pies for $10 a piece. Okay, so $100, 100 pies at $10 a piece, that's $1,000. Okay, so you sold $1,000 for pies that only cost you $300. That means you made $700. Okay, but that $700 is actually split between contribution revenue and gross sales revenue, and here's how that works. And this is this is important. It's a little tricky for people to understand sometimes. The sales revenue would be the fair market value of the pie. So remember, the pie was selling for $6 in the grocery store. Okay, so that's what the pie was worth. You sold a customer a $6 pie for $10. Okay, that means they bought a pie for $6 and they made a $4 contribution. Okay, so your sales revenue was $6 times 100 pies, that's 600. Okay, and then of course there was a $400 contribution in total. $4 times 100 pies. And so you actually made $300 profit on the pies plus a $400 contribution. Now the $400 does not add in anywhere on line 6. Okay, the $400 goes right up here on line 1 as a contribution. Okay, we just put it here on line 6B because it's just a notation letting people know that the fundraiser did generate some contributions which are included up here. Okay, so now you're going to add up lines 6, all of line 6, and so you're going to get the 200 plus the $300 profit here, so that's going to give you a $500 coming in from the fundraiser. Okay, now the next line is line 7, and that's gross sales of inventory. Now let's say you sell t-shirts. Okay, and let's say you sold $1,500 worth of t-shirts and they cost you $1,000 to buy, so you made $500 on selling t-shirts. Now you could say, well, gosh, the apple pies were inventory. Why did we put those up here in fundraising, but we put the t-shirts down here on sales of inventory? And that's because the apple pies were specifically associated with the fundraising event. We don't sell apple pies all year. We do sell t-shirts all year. They have the organization's name and logo on them, and we offer them for sale all the time, or most of the time, and so we put them down here on sales of inventory. Even though we may have sold some during the fundraiser where we were selling apple pies. The t-shirts are still going to go down here on sales of inventory. The apple pies are associated with the fundraiser, and so they're up here on line 6. Other revenue, line 8, this is basically any revenue you have that doesn't fit anywhere up here. Okay, and let's say, for instance, that your state gives you a collection allowance for the sales tax that you collect on these t-shirt sales. They give you a little collector's fee. So then it's usually not very much. Let's say that it's $5. Okay, that's your collection allowance. Now, some people like to put, for instance, refunds that they receive down here in the other revenue section. So let's say, for instance, that you bought something and then you get a refund on it for whatever reason. Okay, you return it, or for some reason you get a rebate or a refund. A lot of people will put that here. I would rather see you reduce the expense rather than reduce the expense that you got a refund for, rather than including it as revenue. Okay, I don't like to really see anything on line 8, but occasionally you have to put something there. And when you do, as you can see here, it says other revenue described in Schedule O. You want to make sure that on Schedule O you provide an explanation for what this other revenue is. Okay, and when you're attaching Schedule O, because you gave an explanation, you also want to come up here and you see up at the very top it says check this box if the organization used Schedule O to respond to any question in this part. So you would check this box, and then so the reader would know to go look for an explanation on Schedule O. So then you're going to add everything up, and if I've added correctly, total revenue is $55,420. That is a quick look at Form 990EZ Part 1 Revenues. Thanks for watching my video tutorial. If you need more help, you can find me on the web at myform990ez.com.